back, everyone, to your own channel, Wealth Creation. Today, we're going to talk about three exciting things which your financial analyst doesn't share with you and which are really critical towards achieving your financial goals in the equity markets.
Guys, the first thing that we're going to talk about is timing. Timing, as I say, is everything, and it also applies to the stock market. If you take a position in the stock market, you need to ensure that you enter at the right level, otherwise, you will not be able to generate the returns that you desire. So let's take an example of Nestle. Nestle currently trades at about 16,000 odd levels. If you look at the last few months, it touched a 52-week high of 18,300. And a friend of mine had actually called me and said, "Hey, Rahul, I want to buy this stock. Nestle has been going great guns. Do you think that I can enter at this level?" I advised him against it. However, he still went ahead and bought it. Well, what really happened after that? We all know the stock corrected to 16,000 levels. Now, that is why the timing of your purchase is extremely important. Well, before it fell to 16,200, there was a further fall to 15,200 levels, which gave an excellent entry level at which I made a purchase and built it into my portfolio. So as you can see, it's extremely important to make the entry at the right level. Otherwise, we will end up buying the stock at a very high valuation. Now that brings me to my next point, which is FOMO. What is FOMO? FOMO basically stands for fear of missed opportunity. A lot of times we see the stock market raging ahead, especially in the last 3 to 4 months. We've seen it skyrocket from a level of 7,500 to now touching almost close to 12,000 at 11,600, 11,700 levels. Now, if you were to buy Reliance currently at 2,300 levels, will it give you a decent return? Well, I'm not so sure. Why? Because it's already run up from a level of 860 to 2300. So there's not room for it to further go up, at least in the short term. If you look at Britannia currently trades at 3,700. Well, it started its journey in March from 2100 levels and is given very impressive returns from there. So yes, had you made an entry at 2200 or even at 2500, you would have made a huge return on Britannia. But at this level, to make an entry will not really be ideal. So that brings me to my next point, which is the risk reward ratio. What is the risk reward ratio? Risk reward ratio is nothing but the ratio which helps you analyze, is the stock giving you more reward or is this stock more prone to risk? So if you look at for example, Bharti Airtel, we've seen that the stock had really run up considerably to a level of almost 600 rupees, and a lot of people made a purchase at 550 to 600 rupees. But in the last few days, you must have noticed that the stock has corrected to as much as 450 level. Now, people who invested at 550 or 600 are stuck at 450 and have seen huge losses in their portfolio. How can we avoid this? If they would have looked at the risk reward ratio, they would have seen that the stock has already run up a lot, and therefore the risk of it correcting is more than the reward. So we must always look at the risk reward ratio. If the reward possibility or chances are higher, make the investment. If the risk is higher and the stock can correct to a lower level, then wait for the correction. Now that brings me to my next point, which is the stock price range. Now every stock has a range in which it trades, ranging from 52-week low to 52-week high. This indicates whether the stock is at its peak or its mid-level or low level. So ideally, I would say if you're able to get a stock somewhere in between the 52-week low to the 52-week high, that's an ideal time to buy it because it gives you a fair valuation. Lastly, you need to avoid all the noise around you. A lot of people, a lot of friends, all the TV, CNBC, all the channels keep telling you these are the targets. This is, well, you need to stick to your analysis. You need to stick to your thumb rule of analyzing the stock, going by the fundamentals, and keeping in mind that you're going to stick in the stock for the long term to create wealth. If you allow the noise to impact you, then it will really impact your decisions of creating wealth.
Second most important is courage and patience. This is something which no financial analyst tells you, and it is not something that is discussed on the TV. So let me tell you, this is one of the key parameters if you want to create wealth in the long term. And I will demonstrate this through an illustration that you can see on your screens. So I've taken four stocks which are market leaders: Reliance, HCLTech, TCS, and Maruti. If you look at the pre-crash scenario, I'm talking about the pre-March low, the prices were as follows. Reliance was quoted at about 1200 levels, and it crashed to 867 rupees, as you can see here. But currently, if you look, the stock is trading at about 2330. So anybody who was holding Reliance at a price of about 1200 and exited at 867 or 900 or 1000 for fear of losing more capital has not only lost a lot of money on the capital but also on the gains which subsequently followed. Similarly is the case with HCL Tech, which is trading at about 600 rupees in February, crashed down to 375 by end of March, and has zoomed up to 867 rupees, giving you more than 100% returns. Have a look at TCS, the market leader in information technology. This was trading at about 2000, 2200 levels prior to the crash. After the March low, it ended up at 1500 levels, and currently it is trading at 2800. It has given phenomenal results, and today we had the results coming out for the last quarter, which have also been very good, and which is also justifying the huge spike in the price. If you look at Maruti, Maruti was available at 4000 rupees. But prior to the crash, it was available at 5,500, 6,000 levels. So anybody who sold out and cut their losses at this level lost a lot of their capital, because currently it's trading at 7,000 and has given quite a decent return. So my point is, we need to have the courage to ride the rough weather. The stock market has its ups and lows. You need to have the patience, you need to have the courage, and only then you will be able to create the wealth that you desire.
When we hold stocks for the long term, we generate wealth through numerous ways. One of the first and most primary way of capital appreciation is well known to everybody, where the stock prices increases every year and gives you an incremental increase in the which creates the value. Now, there are other things and other factors which also lead to wealth creation when you hold the stock for long term, and we're going to talk about that in detail. The first one being bonus shares. So when a company has excess reserves in its books, it uses that excess amount of money that it has to reward its shareholders through issuing bonus shares. The typical example for companies that issue bonus shares are IT companies. IT companies are mostly debt free. They have a lot of cash reserves, and the only way for them to reward the shareholders is to issue bonus shares so that they can utilize this excess cash and also generate the wealth for the retail investors. Now, let's take an example of Wipro. Wipro, when it listed back in 1987, had you invested about 1 lakh rupees then, it would have become 300 crores today, because it's already given 13 bonuses. Now, it's a long holding period, but it has created a huge amount of wealth. So this is one point which you should always keep in mind, that when we hold for the long term, the company, if it has a good management and is a market leader and is also debt free or has low debt, will issue bonus shares from time to time, generally within a duration of 1 to 3 years on a regular basis, which really helps us to create the wealth. Next point is the stock split. What is stock split? Stock split is basically when a stock is trading at a particular face value. Let's say when you company gets the stock listed, its face value is normally 10 rupees. But over the years, when the company grows, and with it the stock price also grows. If you took an example of Nestle, for example, it is currently trading at a level of 18,000. Now, a very few number of people can actually buy Nestle because of the high value of a single unit of share. Now, in order to make it more accessible for the shareholders and to increase the trading in the stocks, a lot of companies go for a stock split. So instead of having a face value of 10, they would actually do this split and go for a face value of 1. So for example, if you're holding 100 shares, those 100 shares become 1000 shares. and a value of 15,000 will actually become 1,500, increasing the float in the market. Now, what happens when the float of stock increases in the market? The stock becomes easy to purchase, and therefore there is more demand for the stock, which helps the stock price to rise rapidly. The last point which I would like to talk about is the buyback of shares. Now, the companies such as IT companies do buyback of shares as another option if they decide not to go with a bonus issue, because in a buyback they basically offer you to buy back the shares of the company at a price higher than the listed price. So for example, TCS has currently come out with a buyback where the price of the company is trading at about 2,800 and the buyback price has been fixed at 3,000. So that gives you a premium of 200 rupees as a direct benefit to the retail investor. So these are the ways in which quality stocks help you to create wealth in the long term, and these you must keep in mind, and this will encourage you to not hold the stock just for 6 months or 1 year, but for longer periods of 5 to 10 years, so that you can achieve your financial goals.
I hope you enjoyed the video. Thanks for watching. Don't forget to like and subscribe to the channel so that you can be notified of all the new updates.